The quarterly performance of Infosys was a tad subdued, with revenue for the quarter at $3.2 billion, growing by 6.4% year-on-year in constant currency. However, the commentary from Infosys management sounded very similar to TCS in recent times and also reinforces our confidence in select large-cap IT names. In our Ideas for Profit today, I will discuss whether investors should think of adding Infosys to their portfolio post the Q4 earnings. Now, due to the COVID-19-led lockdown and the clouded near-term outlook, the company has refrained from giving a guidance for FY21, but the management hinted at a strong long-term tailwind as well. In Q4, the transition of the workforce to work from home resulted in lower utilization, and delayed approval from some of the clients also impacted revenue. COVID-19 impact on Q4 revenue was approximately $30 million, mostly because of the supply disruptions. Now, FY20 revenue grew by 9.8% in constant currency to $12.8 billion. The share of digital is close to 42% now and exhibited a year-on-year growth of 31.7% in constant currency, much ahead of the company's overall growth rate. Now, margins for FY20 declined by 150 basis points to 21.3%. Now, in terms of geography, the key markets of North America and Europe, that together constitute about 86% of the revenue, showed some softness. Now, the interesting takeaway from the result is that traction in the large deal wins stood at $1.65 billion in Q4, of which 56% was the new order. While the headline attrition rate has inched up sequentially also to 18.2%, it is definitely comforting to learn the fact that voluntary attrition at 15% remains quite stable. Now, the company declared a total dividend of 17.5 rupees per share in FY20 that works out to a pre-tax dividend yield of 2.7%. Now, Infosys also has a healthy cash reserve of $3.6 billion and is therefore not unduly worried about likely disruptive quarters ahead, and is also open to opportunistic acquisitions at the right valuations. Now, while supply-side issues impacted the revenue in Q4, in the coming quarters, the decline in performance is likely to come from the demand side, as industries across the board face challenges due to the lockdown in varying degrees. Now, management sees challenges in BFSI segment, also feels that the slowdown will lead to postponement of 5G rollout by the companies, and also manufacturing is facing both demand and supply-side pressure due to the supply chain disruption. Also, the company will use every lever possible to minimize the impact of this crisis on its financials. This also includes freezing on hiring, no increments or promotions, and deferring of the date of joining of 35,000 odd campus hires. Also, no retrenchment and furloughs are on the cards right now. COVID-19 is expected to accelerate the demand for digitization, with cloud, virtualization, workforce transformation, etc. much in demand. Now, this coupled with vendor consolidation in favor of larger companies with uninterrupted supply chain and strong financials puts Infosys in a sweet spot. Now, while the pricing pressure could be there in some troubled verticals, overall the management did not sound too concerned at this point in time. There is little doubt that Infosys will emerge. There is actually little doubt that Infosys will emerge as a strong long-term survivor post a couple of quarters of uncertainty. However, the valuation is still not cheap, unlike 2008, where at the bottom, the company was trading at 10.5 times trailing earnings. Now, a broad market correction could also impact the stock, and we do feel that investors must gradually accumulate the stock, taking the advantage of every market decline right now.